As the world of cryptocurrency continues to expand, investors are always on the lookout for the most profitable ways to earn returns on their investments. Two popular ways of earning returns in the crypto world are through staking and mining. In this article, we will explore the differences between staking and mining, and determine which is better and more profitable. What is crypto staking? Crypto staking involves holding and locking up cryptocurrencies to validate transactions and secure the network. Staking requires investors to hold a minimum amount of a particular cryptocurrency in their wallets, which they use to participate in the consensus algorithm of that cryptocurrency's network. In return, investors receive rewards in the form of interest or more tokens. What is crypto mining? Crypto mining involves the use of powerful computer systems to solve complex mathematical problems, thereby validating transactions on the blockchain network. Miners are rewarded with a certain number of cryptocurrency tokens for every block that they validate, and these tokens can be sold on exchanges for profit. In terms of profitability, staking and mining have their unique advantages and disadvantages. However, staking is generally considered to be a more profitable and easier option for many investors. Staking rewards are usually fixed and predictable, and investors can earn up to 10% or more annually on their staked tokens. Additionally, staking requires less technical knowledge and resources than mining, making it a more accessible option for investors. On the other hand, mining can be more profitable in some cases, but it requires a significant upfront investment in mining equipment, electricity, and maintenance costs. The profitability of mining also depends on the price of the cryptocurrency being mined, as well as the difficulty of the mathematical problems that need to be solved to validate transactions. Staking and mining are two popular ways of earning returns in the cryptocurrency world. While mining can be more profitable in some cases, it requires a significant upfront investment in hardware and maintenance costs. Staking, on the other hand, is generally considered to be a more profitable and accessible option for many investors, as it requires less technical knowledge and resources. Ultimately, the decision between staking and mining depends on each investor's goals and financial situation. It's worth noting that the profitability of staking and mining also depends on the specific cryptocurrency being staked or mined. Some cryptocurrencies have higher staking rewards or lower mining difficulties, making them more profitable to stake or mine. Investors should research and compare the staking and mining rewards of different cryptocurrencies before deciding which one to invest in. Another factor to consider is the environmental impact of mining. Crypto mining requires a lot of electricity to power the mining equipment, and the carbon footprint of mining has become a growing concern for many investors. Staking, on the other hand, consumes far less energy and is therefore considered to be a more environmentally friendly option. Furthermore, staking also helps to secure the network and prevent attacks. By staking and locking up tokens, investors become validators of the blockchain network and contribute to its security. This helps to prevent attacks such as double spending, which can cause significant damage to the cryptocurrency ecosystem. Staking and mining are two different ways to earn returns on cryptocurrency investments, and both have their pros and cons. While mining can be more profitable in some cases, it requires a significant upfront investment and has a larger environmental impact. Staking, on the other hand, is generally considered to be more profitable and accessible, requires less technical knowledge and resources, and helps to secure the network. Ultimately, the decision between staking and mining depends on an investor's goals, risk tolerance, financial situation, and environmental values. When it comes to profitability and ease of use, staking is generally considered to be more profitable and easier than mining. Staking rewards are usually fixed and predictable, and investors can earn up to 10% or more annually on their staked tokens. Additionally, staking requires less technical knowledge and resources than mining, making it a more accessible option for investors. Investors can participate in the staking by simply holding a minimum amount of a particular cryptocurrency in their wallets and following the staking requirements of that cryptocurrency's network. On the other hand, mining can be more profitable in some cases, but it requires a significant upfront investment in mining equipment, electricity, and maintenance costs. The profitability of mining also depends on the price of the cryptocurrency being mined, as well as the difficulty of the mathematical problems that need to be solved to validate transactions. Additionally, mining requires a higher level of technical knowledge and resources than staking, as investors need to set up and maintain the mining equipment, monitor the mining process, and ensure that the mining operation is profitable. Overall, Staking is generally considered to be more profitable and easier than mining, making it a popular option for many investors. However, it's important to note that the profitability of staking and mining depends on the specific cryptocurrency being staked or mined, as well as the investor's financial situation and goals. Therefore, investors should research and compare the staking and mining rewards of different cryptocurrencies before deciding which one to invest in. Biswap is a decentralized exchange, DEX, an automated market maker, AMM, that runs on the Binance Smart Chain, BSC. It provides users with the ability to trade, swap, and stake their cryptocurrency assets in a decentralized and secure manner. Biswap also allows users to participate in liquidity mining and earn rewards for staking their assets. Liquidity mining involves providing liquidity to a decentralized exchange by depositing pairs of cryptocurrencies, and in return, users earn a portion of the trading fees generated by the exchange. Biswap offers users a variety of liquidity pools to choose from, including pools for popular cryptocurrencies such as BNB, BTCB, and ETH. Staking on Biswap is a straightforward process. Users can stake their cryptocurrency assets on the Biswap platform by selecting the staking option and choosing the cryptocurrency they want to stake. Once the stake is complete, users can earn staking rewards in the form of Biswap's native token, BSW. The staking rewards are automatically distributed to users based on their stake size and the duration of the staking period. One of the benefits of staking on Biswap is the high staking rewards. Users can earn up to 100% APY on their staked assets, which is a significant return on investment. Additionally, Biswap's user-friendly interface and low transaction fees make it an accessible option for investors of all levels. Biswap offers users an easy and profitable way to stake their cryptocurrency assets on the Binance Smart Chain. The high staking rewards, combined with the user-friendly interface and low transaction fees, make Biswap an attractive option for investors looking to earn passive income through staking. Click the link in the description to try out Biswap. If you got some value from this video, click the subscribe button to stay updated on our latest videos.